Hello there and welcome to IMTV, the Industrial Minerals News Programme. Coming up today, US chemical firm DuPont is advised by Deutsche Bank to sell off titanium dioxide pigment business. Brazil's Magnesita acquires 50,000 tonnes per year refractory brick plant in China. And fracking in the heart of London. What experts had to say about prospects for Europe at the IM Oilfield Mineral Roundtable. First today, the world's largest TiO2 pigment producer, US-based chemicals firm DuPont, has been advised to divest its TiO2 business by global banking group Deutsche Bank. The note issued in April said the company should take action as early as next year, as the struggling segment has had a negative impact on the company's valuation. Earnings for the TiO2 segment increased fivefold between 2009 and 2011, thanks to short supplies and high demand for pigment-based products such as paint. But since then, income has dropped 60% as buyers started a destocking cycle in 2012. TiO2 contributed 8% of DuPont's 2013 estimated sales and earnings and has been through one of the most volatile cycles seen in all traded chemicals over the last year. Deutsche Bank analysts say a significant upturn in the industry in the next 5 years is unlikely, but delegates at this week's World TiO2 Summit in Barcelona reckon the market will see tighter supply in 2014 despite the bearish market. One analyst with US investment bank Wells Fargo added to the debate, telling the conference that in his view, the DuPont TiO2 divestment would never happen. Brazilian mineral and refractories producer Magnesita Refractários has acquired a refractory products plant in China from the local company Dalian Mayerton Refractories. The company says the $22 million deal will support two of Magnesita's main aims: to grow selectively and aggressively and to maintain a low-cost production base. The plant, which is located in Liaoning province and owned by the Mayerton Group, has a capacity of 50,000 tonnes per year of magnesia carbon refractory bricks and will be renamed the Magnesita Refractories Dalian Company. Magnesita says it expects the acquisition to be completed by the third quarter of this year and is looking to integrate the plant and achieve full production within 2 years, with the possibility of further expansion in the future. The Dalian plant is the latest acquisition for Magnesita as it moves to expand its presence in China, where it already operates a brick plant in Anhui province and owns a number of technical offices. Security continues to be tightened at the titanium slag facility owned by South African mineral sands miner Richards Bay Minerals in a northeastern province of KwaZulu-Natal in the wake of violent protests at the site. A group of people from the local Sekulu community have been disrupting operations at the Richards Bay mine, which is controlled by global mining giant Rio Tinto. The protesters want the company to employ more local residents within its workforce. Around 600 activists began protesting on the 9th of April when they handed over a memo to RBM demanding the company employ at least 50% of its workforce from the Sekulu community. Since then, RBM claim the group has vandalised company property and intimidated staff, which is affecting the mine's output. A statement released by the company stated that since the evening of the 24th of April, operations at RBM have been severely impacted by community disruptions. RBM Security, together with South African Police Services, continues to keep a high presence in the affected operational areas to ensure the safety and security of all people. The protests follow a strike by around 2,000 RBM contractors belonging to the National Union of Mine Workers earlier in April, as the workers rejected a pay rise offered by the company. Production from RBM's South African facility is a significant global source of titanium and zircon products, and the recent disruption is expected to affect the company's second quarter production figures. Now, fracking was a hot topic in London this week at the Industrial Minerals Prospects for Europe Roundtable, where experts gathered to discuss whether Europe could replicate the so-called shale gale of oil and gas exploration seen in the US. Two of the big discussions were about geopolitics and how potential concerns surrounding the environmental impacts of fracking are hindering the development of this potentially lucrative market. Professor Alan Riley of London City University warned that geostrategic issues surrounding shale exploitation are serious. He said the majority of geopolitical concerns surrounding fracking range from worries over earth tremors, environmental impacts such as water contamination, and health and safety considerations. The view was echoed by Hugh Clark, a senior geoscientist with the UK's only licensed fracking company Cuadrilla, who said that community concern over fracking was a widespread problem. Cuadrilla's own operations were halted in the UK back in 2011 after two minor earth tremors occurred during early exploration, a restriction that was only lifted in December last year. Clark added that geologically, Europe has the right ingredients to replicate what's happened in the US shale boom, but reminded delegates that Europe is still at a very early stage in making fracking a route to alternative energy supplies. Now, if you want to find out more about global fracking trends, sign up for our Oilfield Minerals Outlook for 2013 Roundtable on the 19th to the 21st of June in Houston. And finally today, supercarbon graphene made headlines in April with two major industry conferences taking an in-depth look at the material's development and potential applications. The Graphene Live event in Berlin saw experts predict the nanocarbon layer could replace indium as the manufacturing material of choice in the lucrative touchscreen technology market. Other industry experts surprised delegates by reminding them the multi-billion-dollar material has zero market at the moment, given the lack of commercial applications for graphene and the absence of a practical market price. This was followed by news from the Imagine Nano Graphene 2013 event in Bilbao that Imerys-owned graphite miner Timcal is seriously considering graphene as a possible market for its natural and synthetic graphite products. The Swiss company confirmed it was looking into developing graphene-based polymers as possible front-runners in the race to find commercial applications for graphene. But they said the market would ultimately decide which products made it as saleable commodities. Well, that's all we have time for this week. If you have any comments or feedback, we'd love to hear from you. You can get in touch via Twitter @Indmin or contact us through our website www.indmin.com. There you'll find more information on all of these stories. Thanks for watching and see you again soon.